All right, welcome to the Tax Problem Solver. Number to reach us 24 hours a day is 877-257-1040. Email ckm@taxproblemsolve.com. And the reason we have our number available 24 hours a day is people work different times of the day, and a lot of times people are up late at night worrying about this and that, unpaid bills, unfiled tax returns. They owe the IRS, what are they going to do? My spouse doesn't know that I didn't file the return. My spouse doesn't know that I didn't have the money in my business to pay that tax that I told he or she that I was going to pay. So that's why we have this number toll free 24 hours a day, 877-257-1040. All right, we're going to talk about unfiled tax returns now. Vast number of clients that come to us, new clients that come to us, are people that have not filed their tax return. Whether it's that they have not filed 2018 yet, we're now in September of 2019, and the extension due date is coming up October 15th, so that return's got to be filed very soon. So it's not just that they didn't file 2018, but it's 2017, 16, 15, 14, going back. Most I ever had was somebody we had to file close to 25 years of returns all at once. The fortunate thing is he didn't owe money on any of them, and he got refunds on every year. But guess what? He only got to keep the refunds for the last 3 years because that's all the IRS will pay. 3 years of returns, that's it. So right now you can only get a refund for 16, 17, and 18. You file a return with 15 and you have a $10,000 refund, and you file a return for 16, 17, and 18, and you owe a total of $10,000. Guess what? We're not going to be able to wash out that $10,000 refund against the $10,000 due. You lose that $10,000 refund and you owe $10,000 plus some penalties and interest. So it's important that you file your tax return every year. Number one, it's the law. Number two, if you don't file tax returns, you could be subject to criminal penalties based upon the amount that you owe, how egregious you are in not filing. You read it various times of the year. Usually during tax filing time, plumber indicted for not filing 5 years of tax returns. Attorney pleads guilty to tax evasion for not filing 5 years of tax returns. Doctor pleads guilty. CPA charged. And the reason they come out at that time of the year is it's an attention getter, because that's when we're due to file our returns for January, February, March, and April. So if we see that, in an online posting, one of the Google pop-ups when you go to look at the Google News when you open it up, you see it in the newspaper when you look at it, that's going to get your attention. If you're a doctor and you see another doctor got hit for the same thing you're doing, you're going to probably want to file. So you don't have that happen to you. Doctor can't make any money while he's in prison. An attorney might be able to, because maybe he can make commissary money by helping people write their appeals, but that's probably about it. So you want to file your tax return, and you want to file an accurate tax return. If you don't file tax returns, what happens is the IRS will file a substitute return for you. So the IRS will take all the income reported to them on 1099s and W-2s, look at your last filing status. If you were married, they're going to married filing separate for you. Not give you credit for your kids, dependency exemptions, any credits that you might be entitled to, education credits, anything. They're going to give you a deduction for the taxes that were reported in your W-2 for state income tax, and the mortgage interest that your mortgage company reported, and that's it. And with the standard deduction for a married filing separate person of $12,000, that mortgage interest and withholding tax might not be enough for you to itemize. So you're not getting credit for your real estate taxes, you're not getting credit for any contributions, and you're not going to get credit for any medical expenses. So that is not a tax return you want to file for those reasons. Plus, you also don't want to file it that way because you want the joint benefit of your spouse, your kids, whatever education credits you might be, the child tax credit, maybe a dependent care credit if your kids are in daycare while you and your spouse are working. So, and then there's a $24,000 standard deduction now for a married couple filing a joint return. So, maybe those deductions that you have are more than $24,000 because your mortgage interest is high. You're maxed out at $10,000 for state and local income tax, but maybe you have a $10,000 or $15,000 mortgage and there's taxes, and then your contributions. You might have some medical. You might have $35,000 of itemized deductions, and you're not going to get credit for any of them. So you're only going to get a $24,000 minimum. So that substitute return is probably not something you want the IRS to file for you. Now, if you're single, you live with mom and dad, you have an apartment, you don't have any itemized deductions like that, that substitute filed return with $12,000 standard deduction is probably going to be the same return you file. But many times I also see a substitute return for someone that's self-employed, has $200,000 of income, commissions, he or she is a commission salesperson, and they have expenses against it. Guess what? The IRS looks at that $200,000 income, wants to tax you on all of it, gives you no deductions, zero. Well, your expenses might be $75,000, and maybe you should only be paying tax on $125,000 and then all those credits and personal deductions instead of $200,000. So at that time, we file the correct returns, they undo what they did, put the correct things in. So you really don't ever want them to file a return for you. And the other thing is, a substitute filed return can never be discharged in bankruptcy. Income tax is 10. Most recent 3 years cannot. Return has to be filed for at least 2 years. Tax has to be assessed 180 days. Can't be part of a tax evasion or a failure to file type scheme. So, if the IRS files a tax return for you, you can never get rid of that in a bankruptcy because you can only get rid of filed tax returns. So the only thing you can do with a substitute filed return is you can do an offer of compromise, you can do an installment agreement, but let's just do the return and deal with the correct numbers, because I can guarantee you, in almost every case out there, a substitute filed return is not the best return. You want to file your own return. So you're not going to get, like I say, you're not going to get any of these deductions, you're not going to get any of these credits, and if you are doing a refund after they do this SFR, substitute filed return, they're not sending you a check. They only send you a check if you filed a return. So if you want a refund, if you do a refund, you got to file a return. Talk about unfiled returns. We have a client that knows that the 3-year rule. So he comes in every 3 years and we file 3 tax returns for him, and he gets nice refunds every year for 3 years. Why he doesn't come in and get that money and put it in the bank, I don't know, because he obviously doesn't need it to live on, or he would be in every year to file a return to get an $8,000 or $10,000 refund. And I think his refunds are probably around $8,000 or $10,000 each year. I don't know, maybe he and his wife only go on vacation every 3 or 4 years, and they take a nice $20,000 vacation, and that's their savings. I don't know. So that's what you want. That's what you want to do. So we've seen many people over the years lose their refunds because they didn't file. We had a situation probably about 10 years ago. 2 teachers were retiring. They hadn't filed returns for about 20 years. Then they filed them all. IRS denied all the refunds. The last 3 years, they owed money 2 of the years, and they had a refund 1 year, and the refund wasn't enough to cover the 2. They came to me and wanted me to fight for them. I said, I can't do it. It's by law. It's statutory. No refund. Well, that's not fair. Get a tax attorney. I called a tax attorney, got him on the phone. He had me off speaker and he left. And he put me on speaker and he said, there's nothing anybody can do. If you sue the IRS, they're going to countersue you as a frivolous lawsuit, and you're going to have to pay the IRS's legal fees. I asked them, why didn't you file these returns? Well, we wanted to save the money for when we retired and travel the world for a year or 2. That's nice. But why didn't you file the returns and put the money in the bank? Buy a CD that's coming due in 20 years, 19, 18, 17. We're the kind of people that we can't do that. We would have spent all that money. I didn't want to say to them, well, you should have filed the returns and spent all that money, because at least you'd have had some fun. You wouldn't have had that worldwide tour, but you would have had some fun with that $2,000 or $3,000 every year for 20 years. So again, like I say, we've seen many, many people lose refunds because they did not file. But the real slap in the face, or the kick in the butt, is that the years that were under statute, for some reason they wind up owing. It seems like in almost every case they owe the last couple of years, but all those prior years they had refunds. So you've been listening to the Tax Problem Solver. Again, our number is 877-257-1040. Email ckm@taxproblemsolve.com. Thank you very much.